But right now we got to pivot back to Microsoft because those shares, as I pointed out, are falling sharply by more than 11% as the company's CapEx spending plans spook investors, despite the fact that they topped second quarter.
How many of these users do they actually have? And I have an estimate. I think it's about 5 million. There's about 450 million Office.
Microsoft just keeps losing.
Bill Gates is watching Microsoft face what could be its biggest downfall ever in 2026, and the panic is real. In a single brutal shock, hundreds of billions vanished, AI dreams cracked, and the tech empire built on stability started to shake. This is the moment Microsoft's dominance was publicly tested like never before. And then it happened.
The advent of Windows 11, I have to say that Microsoft has truly gone crazy.
In a single trading day in early 2026, Microsoft dropped 10 to 12%. Around $350 to $360 billion in market value vanished within hours. The company's market cap fell from roughly $3.6 trillion to $3.2 trillion. That wasn't a routine market dip. It was the second largest single-day wipeout in US history, behind only Nvidia's $593 billion collapse in 2025.
It's the willy-nilly way in which they're doing business and arranging deals with as many entities as possible out of sheer desperation due to how much money they're burning and how they need every $1 billion possible, every deal that can mitigate the burning of money. And
this wasn't triggered by collapsing revenue or a liquidity crisis. The financials were strong. Over the last 12 months, Microsoft generated $305.5 billion in revenue, up 14.9%. Operating margins hovered near 46.7%. Net margins were around 39%. That's elite territory. Very few companies on Earth produce that kind of profitability at that scale. The balance sheet wasn't weak either. About $89.5 billion in cash and short-term investments sat against $123.3 billion in total debt, leaving roughly $33.8 billion in net debt. Manageable for a company of this size. So why the panic? Because the story changed.
With Microsoft, candidly, it feels like I'm missing the forest for the trees type of moment. Absolutely, people are picking on the CapEx numbers. The CapEx numbers were actually pretty in line with my expectations, but definitely above where I think the rest of the street was.
Microsoft's capital expenditures surged 66% to approximately $37.5 billion, largely driven by AI infrastructure, data centers, chips, cloud expansion. The company wasn't experimenting with AI. It was going all in. At the same time, Azure growth slowed to around 39% year over year. That number is still impressive in absolute terms, but Wall Street wasn't pricing Microsoft for impressive. It was pricing it for dominance. Investors had already priced in future AI profits. They expected immediate monetization to match aggressive spending. When growth decelerated even slightly while spending exploded, the valuation logic started to wobble. The stock wasn't punished because Microsoft was weak. It was punished because expectations were stretched too far ahead of reality. That valuation reset might have been easier to digest if everything else looked stable, but it didn't.
Windows 11 looks shiny on the surface.
While billions were flowing into AI infrastructure, Windows 11 was fighting a very different battle. Between 2025 and early 2026, there were more than 20 major update failures across versions 22H2 through 25H2. These weren't cosmetic bugs. Users reported boot loops, blue screens, broken hardware compatibility, and systems that simply refused to start. In January 2026, Patch Tuesday addressed 112 vulnerabilities, including a zero-day flaw identified as CVE 202.6.20805. On paper, that shows responsiveness. In reality, it highlighted how much instability was building beneath the surface.
Now, just a few weeks ago, Microsoft's first update of 2026 bricked thousands of PCs. We're talking black screens, boot failures, Outlook not wanting to open. Microsoft's official solution? Uninstall the update and wait for the next one.
The update labeled KB5074109 became one of the flashpoints. Users encountered the dreaded unmountable_boot_volume error. Outlook crashed when accessing OneDrive. Files. Sleep mode failed. Microsoft rushed emergency patches KB5070773 and KB5078127 to stabilize systems. When fixes require immediate fixes, confidence takes a hit.
KB5074109 rolls right off the tongue.
Then February brought KB5077181. Reports poured in about infinite boot loops. Systems restarted repeatedly. Wi-Fi displayed connected, no internet. Nvidia users experienced stutters and freezes. Installation errors such as 0x800F0983 surfaced widely. It wasn't a single isolated glitch. It felt systemic.
And it's not an outlier. It's just this month's entry in what was already a catastrophic 2025 for Windows updates. December of 2025. That update wouldn't install on brand new computers.
Microsoft stated that version 24H2 reduced unexpected restarts and failures by 24%. That statistic matters, but perception matters more. For users who experienced repeated disruptions, percentages didn't erase frustration.
Oh, that would have been a nightmare. But now in recent years, we have Copilot entries for Notepad, Paint, and File Explorer. And people are like, why?
At the same time, AI integration inside Windows introduced new volatility. Copilot, positioned as a productivity breakthrough, struggled with stability. Reports indicated that 58% of certain failures involved unresponsive panes. About 31% resulted in Explorer.exe crashes. In 11% of cases, systems fully rebooted. On Nvidia 40 series GPUs, the impact appeared significantly worse. Accessibility tools were interrupted. Some users reported inaccurate or hallucinated responses. Performance degradation became part of the conversation. Microsoft eventually acknowledged that Windows 11 had gone off track and began scaling back aspects of the Copilot rollout. That admission signaled that the rollout may have moved faster than the system could handle. Then came concerns around Recall, the AI feature designed to capture and retrieve user activity through screenshots. Reports suggested incorrect results, slower system performance, and instances where sensitive emails were summarized inaccurately. For enterprise customers, that raised compliance and governance questions. AI was meant to simplify workflows. Instead, it introduced uncertainty. Now connect the broader picture.
Microsoft ships updates without knowing if they work. It seems like hundreds of millions of PCs get them simultaneously. Microsoft waits to see what breaks. Then they fix the fix, then fix that fix, and then 3 months later, maybe your PC works.
Microsoft was investing $37.5 billion into AI infrastructure, while its flagship operating system faced repeated stability issues and AI-related glitches. Azure growth cooled from previous highs. Enterprise customers began hesitating on upgrades. Online forums filled with complaints about broken updates and disrupted workflows. Investors noticed the contrast. On one side, aggressive AI spending and massive infrastructure build-out. On the other, visible friction at the user level. That disconnect reshaped perception. Microsoft no longer looked like a smooth AI execution story. It began to look like a company balancing ambition with operational strain.
Microsoft's response? We're looking into it. Working as intended. Have you tried taking your PC to a repair shop? Dude, your PC worked before your update, but sure, go pay someone to fix it. This is exactly why Meta PCs does things differently.
The market's reaction was swift because expectations had been extreme. AI profits were projected years ahead. When immediate returns didn't align with capital intensity, valuation compressed. That's how hundreds of billions in market value disappear in a day. even when revenue and margins remain strong. The symbolic weight of this moment is hard to ignore. Microsoft was built on reliability and enterprise trust. Windows became dominant because it worked consistently enough for businesses to depend on it. In 2026, the conversation centered on update instability, rushed AI features, and monetization gaps.
So, for example, it was expected that OpenAI would lose $14 billion in 2026. Those projections are now looking very conservative when you look at the fact that in just the first half of 2025, they only made a revenue of $4.3 billion compared to a net loss of $13.5 billion.
The competitive landscape intensified that pressure. Nvidia had already experienced a $593 billion single-day loss in 2025. Across big tech, AI capital expenditures surged without proportional short-term monetization. Investors began reassessing hyperscaler spending models. Questions emerged about whether the sector was entering a repricing phase. The real risk for Microsoft isn't bankruptcy. It's trust erosion. Repeated update failures challenge brand reliability. Enterprise hesitation affects recurring revenue momentum. AI features perceived as intrusive or unstable weaken enthusiasm. That dynamic doesn't destroy a company overnight, but it reshapes how it is valued. When confidence in execution weakens, valuation adjusts. When the operating system at the core of the ecosystem appears unstable, it affects perception far beyond a single patch. So the question moving forward is clear. Can AI investments begin generating visible returns quickly enough to justify their scale? Can Windows regain a reputation for stability before frustration solidifies into long-term skepticism? Will Azure growth reaccelerate or stabilize at a lower trajectory? 2026 may ultimately be remembered as a sharp correction after extreme optimism. Or it may mark the beginning of a structural recalibration in how markets price AI-driven expansion. Microsoft is not disappearing. Its financial base remains powerful. But something fundamental shifted when $360 billion evaporated in a day. The market signaled that dominance is no longer assumed. Execution must match ambition. This may not be the end of a technology giant, but it could be the moment when the aura of invincibility finally faded.